My name is David. I'm the founder and CEO of Fondo. We are the all-in-one accounting platform for startups. We support over 1,000 companies and help them put their bookkeeping, taxes, and tax credits on autopilot. A lot of questions that we get from founders is around bookkeeping. What is it? Why is it important? Do I need to do it? Well, bookkeeping is really important, especially if you want to keep track of your financial statements. Once you raise money from investors, they're going to request your financials either through due diligence or during quarterly updates because they need to provide quarterly financials across their portfolio to their LPs, the investors in their funds. I want to talk to you a little bit about bookkeeping mistakes that can cause issues at your company. So first up, it's just procrastinating on bookkeeping. A lot of times founders will wait until it's a big, massive pile of work that needs to be done. And once you're at that point and your investor asks for it or you need it to make a financial decision, it can really, really delay you. And so it's super important to just get started, get it set up, make it clean, and absolutely make sure it's done right. Next is using Google Sheets for bookkeeping. Google Sheets is an absolutely amazing software. You can use it for all kinds of things, including keeping track of your finances. However, it's prone to errors, it's not able to be reconciled, and it's not professional. And so if you want to look like an amateur to your investors, you can stick with Google Sheets, but you really want to show up like a pro. You are a founder, you're a venture-backed founder, and you really want to show up and look like a professional anytime it comes to finances. If you're sticking to cash basis on your accounting, you might be missing out on some important details. Recording transactions, when cash changes hand, it can make your financial picture uneven. You want to be using accrual basis financials. What that means is timing of the revenue and expenses are aligned. So you're utilizing your expenses across a normal period. You're recognizing your revenue at the period where it value to your customers so you can get a nice smooth line of revenue and expenses. So using accrual accounting, it helps you track revenue expenses as they happen, giving you a clearer view of your financial health. I'll give you an example. If you prepay your rent for 6 months, you want to recognize those expenses over a 6-month period. So you pay rent, $6,000 over 6 months. You pay it in January. You want to recognize that $1,000 expense in January, February, March, April, May, June. That is accrual basis. That is recognizing your expenses as they happen, not as the cash changes hands. Why is this important? Because it gives you a true financial picture of your company. You are spending and you are recognizing that expense $1,000 at a time. You're not paying $6,000 in rent for the month of January. You're paying $6,000 in rent for 6 months. And so you want to recognize that expense across those 6 periods so you can really get a true financial picture of the company's operating expenses. The other big mistake that we see is misjudging your burn rate and expenses, okay? Your burn rate is your cash burn. So that's the amount of money that you're spending every month. And that's net burn that we're talking about. Tracking your net burn is so crucial so that you can understand your runway. Your runway is how much time you have to generate revenue, to make the business sustainable, or to generate enough revenue to raise your next round of funding. So knowing your revenue is super crucial. It's a cash basis exercise. And so you want to be tracking your operating expenses and tracking the financial health of the business through the accrual basis, but you want to be measuring your runway on a cash basis because your cash expenses is how you know when you're going to run out of money. So that's super important. It's important to know the difference between the two, and it's important to measure yourself against both of those policies. Another big mistake that we see is not invoicing or collecting payments on time. Companies might sign customers, founders are super busy. They really are busy focusing on getting new customers, getting those demos, getting those pitches in so that they can actually deliver on that value, right? You close the customer, you start delivering on that value, they start getting access to your software. Or even crazier, you pitch investors, you close them, but you're not tracking when they wire you the money. I can't tell you how many times we found safe notes that were signed and money that wasn't deposited. So bookkeeping is a really important thing that you can use to keep track of your deposits as they're coming in, as your customers are paying invoices, as your investors are following through on that safe investment. Another big mistake that we see is double paying expenses. You might get an invoice from a lawyer. You might get an invoice from one of your contractors. And if you're not managing your bookkeeping, you might end up paying those twice or 3 times. I can't tell you the amount of times that we have seen companies overpay their vendors by simply not tracking what has been paid and what hasn't been paid. Bookkeeping is really good at keeping track of that. Another big one, keeping track of your payroll. You've got a ton going on with your payroll. You have employee payroll taxes that are paid by your employees. You have employer payroll taxes that are paid by the employer, which is your company. You've got your workers' comp. You've got other insurance that's required by various states and agencies. You want to keep track of all of that so you understand where your money is going and if you are in compliance with your payroll tax. So when you get that notice from the IRS that says you didn't pay your payroll tax or your payroll provider didn't pay your payroll tax, you have proof in your financial statements that yes, you did, and you know exactly when it was paid. That's where bookkeeping really comes in handy. Look, doing this stuff after the fact and cleaning up is definitely possible. We've all been there. You're busy, you're trying to get customers, you're trying to grow your company. But I will tell you this, if you get on top of it now and you handle it, your future self will really appreciate your prior self. If you get on top of it ahead of time, which you have to do anyway for taxes, which you have to do anyway for your 409A evaluation, which you have to do anyway because your investors are going to request it sometimes quarterly, you're going to really appreciate if you get it under wraps early on. You can hire somebody, you can work with an accounting platform like Fondo that will handle the setup, it'll handle the managing of categorization, the reconciliation, and send you beautiful financial reports that you can access in your beautiful dashboard. Make sure that your taxes are filed on time, all in one place, while making sure you're maximizing tax credits so that you can get up to $500,000 a year back from the IRS. Super important for you to have peace of mind, to know that you're not doing anything illegal with your taxes, that you're staying in compliance with all federal and state agencies guarding your corporate tax. Also, you're not double paying people. Your investors are depositing their safes that they're committing to. And of course, your runway. If you follow these little basic steps along the way, getting to your unicorn status, raising that seed round, raising that Series A, it's going to be so much smoother. Reporting to your key stakeholders is going to be so much smoother. You don't have to work with anyone in particular. Just work with somebody. Work with a platform. Work with someone like Fondo to make sure all this stuff is handled and off your plate. You have peace of mind and you can build a successful company.